Ouagadougou, Washington, September 2025. The announcement that Burkina Faso's President Ibrahim Traoré has rejected a reported $3 billion International Monetary Fund (IMF) relief package has sent ripples through financial and geopolitical circles. The rejection is not simply about numbers, it's about sovereignty, resources, and suspicions of hidden strings attached. Among those alleged strings is a controversial digital dollar initiative said to be connected with former US President Donald Trump's policy networks. For Burkina Faso, this is more than a financial offer. It is a test of whether the nation will trade natural resources for temporary fiscal breathing room or resist external pressure in pursuit of long-term independence. According to IMF insiders and African finance officials, a $3 billion relief line was indeed tabled. Official documents describe it as emergency stabilization support. However, what is less clear and disputed is the collateral framework. Some reports allege that the offer tied repayment to resource guarantees, gold, oil, or uranium, commodities abundant in Burkina Faso and West Africa. Further complicating the story is chatter of a digital dollar plan. According to leaks in Washington, Trump-linked policy advocates suggested using African debt deals to test a blockchain-based digital dollar system. This would, in theory, anchor US monetary influence globally. Whether this idea was directly tied to the IMF's $3 billion proposal remains unconfirmed. Ibrahim Traoré's rationale appears grounded in sovereignty. In speeches over recent months, he has emphasized that Africa must not exchange resources for temporary financial relief. Our gold, our oil, our uranium, these are not collateral for someone else's digital experiments, a senior aide said. Rejecting the $3 billion IMF package signals a refusal to continue the cycle of resource-backed debt that has historically left African nations beholden to external institutions. Instead, Burkina Faso is pursuing regional partnerships, especially with West African neighbors, to pool reserves and resist IMF conditionality. Resource-backed debt has long been a controversial practice. Instead of borrowing with general fiscal guarantees, nations pledge physical assets, gold reserves, oil shipments, or future uranium output as collateral. On paper, it reduces credit risk and secures lower interest rates. But critics argue it effectively mortgages the future. You gain liquidity today but risk losing sovereignty tomorrow, says Professor Marie Coulibaly, an economist at the University of Dakar. If commodity prices fall or debt terms sour, nations can lose control of their own resources sometimes for decades. Burkina Faso, with its gold-rich terrain, would be particularly vulnerable. A $3 billion lifeline could quickly spiral into resource dependency. Perhaps the most explosive element of the story is the rumored Trump-linked digital dollar. Reports suggest that think tanks and financial operatives tied to Trump's circle have been pushing a plan, use IMF or bilateral relief packages in Africa to create testbeds for a US-backed digital currency. The alleged logic is strategic. China has already launched digital yuan pilots across Africa, while Europe explores digital euro projects. A digital dollar, particularly one linked to resource-backed African debt, could extend American financial influence. However, critics say such moves risk treating African nations as laboratories rather than partners. For Traoré, this allegation strengthens the case for rejection. Burkina Faso refuses to be a guinea pig for global experiments. For Traoré's administration, sovereignty is the central frame. This is not about dollars or technology, it's about who controls Africa's future, declared government spokesperson Souleymane Zongo. Instead of IMF relief, Burkina Faso has explored alternative finance by strengthening ties with BRICS Plus nations, seeking direct gold for infrastructure swaps with Asian partners, and developing regional security and trade initiatives within ECOWAS despite tensions. In this lens, rejecting the IMF offer is not isolationist. It is a proactive assertion that Burkina Faso will not accept relief that comes with conditions eroding long-term autonomy. The decision has sparked mixed reactions across West Africa. In Mali and Niger, leaders aligned with Traoré voiced support, praising Burkina Faso for resisting external pressure. In Côte d'Ivoire and Senegal, however, some officials warned the move could isolate Ouagadougou from critical financing channels. Markets also responded. The CFA franc zone saw mild volatility, though Burkina Faso itself, having shifted reserves into gold, remained insulated. Analysts note that resource-backed debt terms often create long-term instability, so some investors quietly applauded Traoré's boldness. What should observers watch next? 3 things: whether the IMF releases the full terms of the $3 billion proposal, whether ECOWAS endorses or criticizes Traoré's decision, and whether US networks publicly advance the digital dollar plan. Ultimately, the rejection is not an ending. It is the opening move in a longer contest between African sovereignty and global financial institutions. The reported $3 billion IMF relief package offered to Burkina Faso was more than an economic proposal. It was a geopolitical gambit. By rejecting it, Ibrahim Traoré has placed sovereignty above short-term relief, sparking debate across Africa and beyond. Whether the alleged Trump-linked digital dollar plan was real or exaggerated, the broader truth remains. Africa is tired of resourceful finance deals that compromise long-term independence. In this sense, the rejection is symbolic. Burkina Faso has chosen resistance over reliance, sovereignty over strings, and the uncertain path of independence over the well-worn road of debt dependency.